Commissioner Killeen,
Here.
Commissioner Dobb,
Here.
Commissioner Clark Coleman, Commissioner Kenizik, Chair Basham,
Here.
you have a quorum present.
Next item.
B, Chair's remarks.
I have none for this meeting. Thank you.
C, approval of the August 23rd, 2023 meeting minutes.
Approval, Mr. Chair. Been moved by Commissioner Killeen. Can I get a second? Seconded by Commissioner Dobb. All those in favor?
Aye.
All those opposed? The ayes have it. Next item, Madam Clerk.
D, unfinished business. There is none listed.
Okay, next item.
Item 1, under new business, forwarding a final copy of the Office of Legislative Auditor General's Financial Assessment Limited Review Report for the Wayne County Building Authority's audited financial statements for the fiscal year ended September 30th, 2022.
Okay, just for the record, I'll let you know that Commissioner Kenizik, former king of the high school, is present. And I'd like to welcome our Auditor General, her staff, and our guest. So welcome, Ms. Cora. Please proceed.
We have guests from the building authority and they can join us at the table, Mr. Jones. And then we also have Michael Bridges from M&B Financial Reporting on Zoom. These two items, the first one, this is our financial assessment limited review report. These are the last two financial assessment limited reviews for the fiscal year 2022. These are the two standalones, the building authority. The next one will be the CDE. So I'm going to turn it over to Sandra Allen and she'll go through the quick presentation. Oh, I'm sorry. If I could have our auditee introduce himself first too.
Oh, yes. Good morning to the chair and then the Board of Commissioners and all staff that's available here today. Thanks you for being here today. My name is Daryl Jones. I'm Facility Building Division Director and also as far as Building Authorities Administrator staff.
Welcome.
Good morning, everyone. I'm Sandra Allen, Legislative Auditor 3. Our report for the Wayne County Building Authority Financial Assessment fiscal year ended September 30th, 2022. The Office of Legislative Auditor General received the Wayne County Building Authority's financial report, including audited financial statements for the fiscal year ended September 30th, 2022. And on page 2, the authority was created in 1961 under provisions of the State of Michigan Public Act number 31, extra session of 1948 as amended. The authority was established to provide for the acquisition, furnishing, equipping, owning, improvement, enlarging, operation, and maintenance of buildings and building sites for lease to and eventual ownership by the county. This includes recreational facilities, stadiums, parking lots, or other structures. A 5-member board whose members serve a 5-year term govern the authority. The county executive, subject to approval by the Wayne County Commission, appoints the board members. The authority's administrative functions are managed by officials in the Department of Management and Budget. The authority is a blended component unit of the Charter County of Wayne, Michigan. Blended component units are legally separate entities from the county, but because they provide services exclusively for the benefit of the county, their financial operations are combined into the primary government operations for reporting purposes in the annual comprehensive financial report in accordance with generally accepted accounting principles, GAAP, of the United States of America. The external auditors report on page 2, Plant Moran, PLLC, the independent external auditor, stated that the financial statements presented fairly in all material respects the financial position of the Wayne County Building Authority as of September 30th, 2022. This type of opinion is issued by an auditor when the financial statements presented are free of material misstatements and are represented fairly in accordance with the generally accepted accounting principles. It is the best type of opinion an entity may receive from an external auditor. The auditors noted under required supplemental information that management omitted management's discussion and analysis and the budgetary comparison schedule for the general fund that generally accepted accounting principles require be presented to supplement the financial statements. Such missing information, although not part of the basic financial statements, is required by the Governmental Accounting Standards Board, which considers it to be an essential part of the financial reporting. However, the auditor's opinion on the basic financial statements is not affected by this missing information. Financial results operations on page 3. The authority's financial operations are accounted for in 3 types of governmental funds. 1, the general operating fund. This fund accounts for all financial resources and expenditures except those accounted for and reported in another fund. 2, debt service fund. This fund is used to account for and report financial resources that are restricted, committed, or assigned to expenditure for principal and interest. 3, capital projects fund. This fund is used to account for and report financial resources that are restricted, committed, or assigned to expenditure for capital outlays, including the acquisition or construction of capital facilities and other capital assets. Governmental funds in thousands. We had revenues of 1832 for fiscal year 2022 and 183,400 in fiscal year 2021. This represents a decrease of 181,568. This decrease is primarily due to a substantial decrease in payments from other county funds, such as the debt service fund. Fund balance in fiscal year 22, 7817, and in fiscal year 21, 7699, with an increase of 118. This increase is primarily due to operating revenue in excess of expenditures of 118,832. The building authority's net position decreased by 205,112 in fiscal year 22. This change is primarily the result of a decrease in the debt service fund balance. As of September 30th, 2022, the authority's total governmental fund balance was 7.8 million, an increase of 118,832 from the prior year. A significant portion of the fund balance is restricted to indicate it is not available for new spending because it has been already committed to pay debt service of 5.6 million, program activities of 998,776, and capital improvement expenditures of 776,621. Budgetary information on page 3. The annual budgets should be adopted on a basis consistent with generally accepted accounting principles and state law for general fund and all special revenue funds. State law requires the authority to have its budget in place by October 1st. The Wayne County Building Authority did not prepare a budget for the years ended September 30th, 2022 or 2021. In conclusion, based on our limited review, nothing came to our attention that caused us to believe the Wayne County Building Authority's audited financial statements are not presented. It is our recommendation that the OAG's financial assessment limited review report on the Wayne County Building Authority's financial statements for fiscal year ended September 30th, 2022 be forwarded to the Wayne County Commission for receiving and filing. That concludes my presentation this morning.
Commissioner Kanesic has a question or comment.
So I don't have my computer in front of me, so I'm wondering whoever's controlling it can scroll back up to the table. So it shows here that revenues in FY22 were 1.8 million, revenues in 21 were 183 million. But then we list it as a decrease of 181 million. And then the same with the fund balance piece. I'm not understanding how the numbers interplay with each other.
Ms. Cora?
The revenues, this is part of the old jail bonding fund, so the revenues have gone down, so we only had the $1.8 million. Where in fiscal year 21, there were 183 million.
Okay,
So that's the jail fund, the old jail funding.
okay.
And then the fund balance is the difference from the revenues and expenditures, so the fund balance went up.
So, and can you help me understand too, just like why it's such a huge gap? I know you just kind of said it cursory, but there's a huge gap year over year.
Right. In fiscal year 21, you had the funding for the old jail. So those bonds have been moved over to pay for the current construction of the new jail. So that's why there's such a gap. And Mr. Jones could probably,
Yeah, and I believe you're talking about the 2010 bonds that we actually
Yes.
officially paid out.
Mhm.
Then moved over transitions for the new jail CG, as in CJC, or necessarily for that jail project. Anything that was necessarily left from that point was moved over from that process.
Did that answer your question?
because when I first looked at it, I thought the same thing, that's a
Yeah.
huge gap.
Okay, I have a question relative, maybe it's not relative, but I mentally think it's relative. If we're supposed to be with the authority, building authority, we're supposed to be maintaining, part of this is maintaining our buildings in Wayne County, correct?
Well, most of the, as far as the Wayne County Buildings Authority, most of that is, Commissioner, is primarily is the probation officers and the probation's officers that we have, like the Hamtramck, certain buildings of that. It really doesn't get into the maintaining of the buildings per se, as far as what the Wayne County owns, just necessarily those probationary officers that we actually deal with is most of the work that we've actually done through the Wayne County Building Authority. Prior to me getting here, I'm not aware of anything that we've actually transitioned over with necessarily resulting to buildings repairs or anything from that point. Strictly, our Wayne County Building Authority has only operated off the probationary offices and things that we have with the Boji Group, the Boji Group and other municipalities in that area.
Ms. Cora?
And he's correct, if I could add to that, that would be the department that would be responsible for the maintenance of the building. The building authority has only the couple buildings that he referenced.
So now which department, for example, I'll use the Henry Ruff, Wayne County Sheriff's Office, that the mold on the floors, roofs in terrible shape, the building's not inhabitable. I mean, how can we, if somebody's got to be responsible for maintaining that building, and nobody's been responsible for doing it.
Yes, sir.
So, and I'm not trying to kill a messenger here.
Oh, no, I understand. I clearly understand it. And in that process, one of the things is that we've always talked about is, and I think in our committee, preventative maintenance and different things.
Yes.
Most of our funding, as we know, is the building division, which is now a facility management group, necessarily came from general funds. Anything that we did capital, we necessarily had to be approved for capital funds in order to use to make that assessment from that point. And I think we're in that process now. As you know, we've got the building temporarily closed, and it's based on necessarily everybody's working out of necessarily portable units. And so that process would be coming up an assessment from the facility management group now to say, hey, do we have the general funds in order to necessarily make that building viable again? So that is something that we have to go through. At that time, I think currently it would have been through EDD and under the direction of Khalil Rahal, who's no longer with us. So that has to be reassessed again.
Well, the thing of it is, I think it's bigger than that. I think the commission plays a responsibility, as the administration does, with maintaining our buildings, and to have people work in a building that, because some commissioners raised some, I guess, ire about it. They wound up moving the folks out of there, but they were working right up until recently in that building. But I still don't understand how somebody for years and years and years, not one person, but the county has not maintained that building for forever. And then we say it's not worth maintaining, even though it has a gun range and even has we're now using the airport authority's gun range and all this other stuff, but it's not it doesn't bode well for the county administration or even the commission to let our buildings that we own, that's in the center of the county, I mentioned that, and also has its own gun range, to just let it go and say, well, let's get another one out here at the north end of the county. And that even hasn't even come in front of the commission yet.
Mhm.
But there's talk about that moving forward, and we haven't had one discussion as a commission about that.
Good morning, Chairman Darcel Brown, Legislative Liaison for the Wayne County Executive's Office. And I definitely understand what you're mentioning right now. That's a conversation that I'm sure we can take up in the future with the task force or the working group, buildings group. I'll forget the exact
Sure.
title. Yeah, that you oversee. I know this item, though, that we're speaking of now with the building authority is a separate entity from the division, the facilities division. So just want to clarify that, there's two separate things, but we can take this item up.
And if
at a
I
later
may
date.
add this, my tenure here started October 2019. So primarily prior to that, we had no assessments of building assessments of all our buildings and no preventative maintenance dialogue for the past 2 decades. So one of the things that we did is develop a development property analysis. I think we've actually shared that with previous meetings, and that's where we're continuing to work to. So we do know and realize that understanding that we need to make sure that we're taking care of the buildings. It's just that it's been a process of necessarily maintaining them and getting assessment, which took over a few years in order to get. And that's what we worked off in our previous meetings, Commissioner, that we've had with you.
Yeah, and I if you weren't here, I would say good things about you, but you're here, so I can't. But-
Thank you.
But there was even work orders from the Wayne County Sheriff's, two that I know of,
Mhm.
turned in that were refused. Work orders,
You want to answer? You want me to answer?
Well,
and I'll get back on subject. So,
yeah, Commissioner, I just want to make sure again, that is a separate discussion from what we have on the agenda. And that's something that we can definitely discuss in the future with the working group.
I certainly didn't want to bring it up at this meeting, but it is on my mind, and some other commissioners might think that also. But anyway, so we'll get back on subject. So,
Okay.
Ms. Cora, do you want to do the next one or?
Okay.
I'm sorry, Commissioner Dobb.
Thank you. I'd just like to bring up the subject of the budgets. So the authority did not prepare a budget for the years ending in 2022 or 2021. Marcy, is that is that required by generally accepted accounting principles?
Yes.
So may I ask why those budgets were not prepared, and will a budget be prepared for 2023?
So Commissioner Dobbs, what we receive, and basically this is primarily necessarily with the entity of the Boji Group, they do not submit a yearly budget to the Wayne County. What they have necessarily is a requisitions, and this is a third-party bank. I think Third Street Bank is a party of those budgets. And what they do is that we haven't in the past 6 years received a budget. What we do is get an assessment. I think I provided that to, and you may have not received it, on July the 6th. It's a quarterly, an assessment of what they've actually spent. Since it's actually covered by the government, Lansing, state of Michigan, who actually reimburses them. It's actually no funding that we actually have any money involved into it. So they just sent us a requisition of what they need to replace. And it's actually covered through the state, because at one time we didn't own the building. Now we do own the building, but at the same time, any assessments and any requisitions that are given, we just give approval for it, but it's all funded through a third-party bank. So we don't actually get a budget from them. We do get a necessary requisition requirement quarterly. And I think I submitted that on July the 6th. If you didn't receive it, I'm looking at my email, and I can make sure that you get that. So we don't get a fiscal year budget.
While you don't get a budget from them, couldn't the building authority estimate how much the expenditures are going to be in revenue coming and come up with a budget that actually could be approved. And it can always be amended once you have the actual expenditures.
And you know what? That's a good point. As far as not in accounting, but at the same time, I think we could probably assess those numbers and then actually put it together and give you a kind of picture of what's being done. Although some of those items may not be a year based on what they purchased, but it may be something that's different. We have replaced carpet in that building, and that's a different assessment. And certain things are material as far as inside the building that may differ. But yeah, I think we could probably.
Yeah, and
That's
probably
exact-
working with financial reporting, maybe you guys could come with a budget that could be approved by the authority.
We'll do our best.
So Rowan, I think we're starting to row together here. Well, that's a good thing. So,
Oh, yes.
thank you.
Thank you.
Y'all said,
Yes, thank you.
okay, Commissioner Clean.
Thank you, Mr. Chair. Good morning, Mr. Jones.
Good morning, Commissioner.
Do you have a list of all of the properties that are involved with the building authority? Obviously, stadiums. But what other facilities are we dealing with through the building authority?
Actually, particularly, it's just the probationary offices that we've been dealing with, just about 2 to 3 buildings from that point. As far as necessarily been under my tenure, is my understanding.
That's the only thing? The stadiums are in the stadium authority.
Mhm.
This building is in economic development.
I think the stadiums would necessarily.
You only
fall under-
have one item in your. Can you describe what the relationship is between the authority and the Boji Group? That's come up a few times today. What's the relationship there?
To be honest, I don't know what the exact relationship. I do know that at one time, the division, as we didn't own the building, then Lansing got involved, the state of Michigan got involved, and that we purchased the building through the state of Michigan. And necessarily it's a third-party vendor that actually handles with this Third Street Bank, I'm sorry, that handles all the negotiations for that. That would be something that I have to ask legal counsel, and that they can provide that information for you.
Yeah, I would, did the state specify that it would be the Boji Group? You're gonna do this and here's the folks and.
Well, they were established prior to me getting here, so that's something that I probably have to check with the accountings.
Yeah, I would like to get a little more info on that.
It is vague.
Yeah, because we don't have like board members here today
That is correct.
of the authority. To understand what that relationship is, it's a little disquieting that it's like, well, we don't know, the Boji Group does it. Do we get communications from the state of Michigan regarding you haven't sent us your budget this year?
No, just only through the Boji Group.
Yeah, see, you said that again. Yeah, I think we need to understand what that relationship is. Apparently, it's the Boji Group that's running everything, not the authority. Which seems a little, to use a phrase, back ass words to me, but as far as public money and government goes. Can you submit something with regards to the relationship between the authority and the Boji Group? And how that all got done? And I don't know if the auditors have seen this, whatever this contract is, or whatever this was set up.
The external auditors may have this, who perform the actual work. Like Moran.
Yeah, but it wasn't mentioned in there.
No, because we wouldn't have seen it. We just take the Plant Moran financial statements.
But just reading what Plant and Moran
Yeah, no.
had, they don't exactly clarify what that relationship is either. So one way or another, I think it'd be really important to clarify what that is.
I think your point's well taken and we should. have some
That's it,
conversation.
Mr. Chair. Thank
Thank
you.
you. Okay, please proceed. Ms. Cora.
You need to vote on this item.
Oh, okay. All right. Why don't we do that then? Can I get a been a motion to receive and file by Commissioner Colleen, and can I get support?
I'll support.
Supported by Commissioner Dobb. Any further discussion? All those in favor, say aye. All those opposed? The ayes have it. Next item, Madam Clerk. I'm sorry, Ms. Cora.
We have representatives from Economic Development here, if they could join us at the table. And I believe we also have Michael Bridges online. The next item is Wayne County Detroit Community Development Entity Financial Statement Assessment for the fiscal year ended. This one's different, August 31st, 2022. And Tim Small will do this presentation.
Well,
Our auditee could introduce himself.
good morning, everybody. Hassan Sheikh, Director of Economic Development.
Welcome.
Thank you.
Okay, I'll walk through it. From our background on pages 2 and 3, Wayne County, Detroit CDE, the company was formed on August 25th, 2003 under the laws of the state of Michigan. The company is a discretely presented component unit of the county, and its financial statements are included in the county's annual comprehensive financial report because the county is in control of the selection and approval of the company's board of directors. The articles of incorporation and the bylaws were amended on November 17, 2005 in order to reorganize as a nonprofit organization under section 501c3 of the Internal Revenue Code. The company filed IRS Form 1023 application for recognition of exemption in order to change its taxable corporation status to that of a nonprofit organization exempt from taxation. The company is a qualified community development entity, CDE, that holds new markets tax credit, MNTC allocation authority to be used for investment in qualified active low-income community businesses. As of August 31st, 2022, the company has been granted allocations totaling $77 million of NMTC authority from the U.S. Treasury's Community Development Financial Institutions Fund. Prior to FY 2021, the company had allocated the entire $77 million to subsidiaries. The company's principal business objective is to receive, administer, and distribute funds for religious, charitable, educational, and scientific purposes within the meaning of Section 501c3 of the Internal Revenue Code to include the following: to revitalize low-income communities, to create community economic and service programs that will assist in the redevelopment of low-income neighborhoods and communities, to attract private and/or public investors that will rebuild neighborhoods and create jobs to benefit low-income communities and/or low-income individuals, to facilitate and distribute investment capital to benefit low-income communities and/or low-income individuals, to lessen the burdens of governments by creating programs and supporting projects designed to stimulate economic growth and job creation, to develop an advisory board to oversee and maintain the plan of action of the company. The advisory board will consist of residents of low-income communities, representatives of organizations servicing these low-income communities, and other members of these communities. On March 24th, 2020, the company entered into an agreement with the bank to create the Wayne County Small Business Microloan Program, a loan fund for microloans to certain small businesses in Wayne County, Michigan, to be used for essential business purposes. Under the terms of the agreement and subsequent amendments, the company contributed $3 million into the program. On April 2, 2020, the company entered into an agreement with the county whereby the county loaned $2 million to the company for use in the program. Under the terms of this agreement, the county paid funds paid to the company less attributed loan losses incurred shall be reimbursed to the county upon termination of the program. The program is being administered by the bank, which includes loan origination, servicing the loan, application of payments, tracking and reporting loan performance, and modifying and adjusting loans as necessary. Loans under the program were originated until July 31st, 2020. As of July 31st, 2020, a total of $3,699,000 was used for qualified loans. The remaining balance of $1,300,500 of the initial $5 million funding was not used and was returned to the company. So from page 3 of our report, the company received an unmodified opinion on the audited financial statements for the year ended August 31st, 2022 from Allen C. Young and Associates, the external auditor for the county. An unmodified opinion is issued when the external auditor concludes that the financial statements taken as a whole are presented fairly in all material respects to the financial portion of the entity in accordance with generally accepted accounting principles. The auditors noted under other matters that management omitted management's discussion and analysis and budgetary comparison schedule that GAAP require be presented to supplement the financial statements. Such missing information, although not part of the basic financial statements, is required by the Governmental Accounting Standards Board, who considers it to be an essential part of the financial reporting in an appropriate operational, economic, or historical context. However, the auditor's opinion on the basic financial statements is not affected by this missing information. The financial highlights from pages 3 and 4 of our report. The total assets of the corporation, comprised of almost entirely cash bank deposits, decreased during the year ended August 31st, 2022 from 2021 by $114,000 or 2.4%. This is primarily due to a decrease in loan fund receivables in connection with the county's small business microloan program. The total liabilities of the program, comprised of almost entirely a $2 million loan from the county in 2020, slightly decreased during the year ended August 31st, 2022 from 2021 by $5,270 or 0.3%. This was entirely due to a decrease in accrued liabilities. The total net position of the corporation decreased during the year ended August 31st, 2022 from 2021 by $108,830 or 4%. This is primarily due to a decrease in loan fund receivables in connection with the county's small business microloan program. There were no reported operating revenues for the 2 years ending August 31st, 2022 and 2021. Prior to fiscal year 2021, the company had already allocated its entire $77 million NMTC authority to the subsidiaries. During the fiscal year 2020, the last subsidiary allocatees were unwound and the company received the payments associated with the unwinds. This explains why there were no reported operating revenues for the past 2 years. The principal operating revenue of proprietary funds are fees for services provided to the subsidiary allocatees. As there were no more subsidiary allocatees, no fees were charged, and therefore there was no related revenue reported during 2022. The total operating expenses for the year ended August 31st, 2022 were approximately $37,000, comprised of mostly professional fees. This is a decrease of approximately $51,000 or 58%. The decrease is primarily related to lower accounting and MNTC compliance fees and professional fees. The following non-operating revenues and expenses resulted from the small business microloan program. Non-operating revenue in the form of loss reserves declined from $724,159 for the year ended August 31st, 2021 to $153,000 for the year ended August 31st, 2022, a decrease of $571,000 or 79%. Non-operating expenses in the form of loan write-offs declined from $402,820 for the year ended August 31st, 2021 to $225,861 for the year ended August 31st, 2022, a decrease of $176,959 or 44%. Net receipts related to the small business microloan program comprised the corporation's cash flows from investing activities, which declined from $2,326,000 for the year ended August 31st, 2021 to $478,000 for the year ended August 31st, 2022, a decrease of $1,847,000 or 79%. So our conclusion on page 5, based on our limited review, nothing came to our attention that caused us to believe the financial statements referred to above present fairly in all material respects. The financial portion of the Wayne County Detroit Community Development Entity as of August 31st, 2022, for the year then ended in accordance with accounting principles generally accepted in the United States of America. It is our recommendation that the OAG's financial assessment limited review report of the Wayne County Detroit Community Development Entity financial statements for the fiscal years ended August 31st, 2022 and 2021 is forwarded to the Wayne County Commission for receipt and filing. Thank you.
Ms. Core?
As indicated, the management discussion analysis wasn't included in the financial, even though it doesn't affect the opinion. That was the same thing for the building authority. And I believe another standalone, the sewage authority, also didn't have it. So my goal is to work with Department of Management and Budget to see if we can get these management discussion analysis into the financial statements for next year.
I see a yes at the end of the table. Thank you.
We'll absolutely be working together to make sure that we get all entities entered in that need to be entered in.
Thank you. Any questions or comments from commissioners? Commissioner Kling.
Thank you, Mr. Chair. Trying to figure out a couple of things in the paperwork here. Does the company CDE, so they have a board of directors?
Yes, it does.
Can you share that with our Auditor General?
Yep, I can share the.
And how do they become members of the board?
So that is through the county. We control the board of directors there, and they're appointed by the county.
By
the county.
I don't believe that comes to the commission for approval. We'll leave that for now. What's the advisory board? Do you have one?
Not to my knowledge. So the last meeting that we had was the meeting that I actually became the executive director. So I'm still wrapping my head around a few items here. But at the same time, I do have a good understanding of the historical context of the CDE, as well as where we were and where we're at currently, as well as working together to formulate a strategy with how we want to operate moving forward.
If I'm reading this correctly under the IRS code, this is focused on low income communities and business development, which we have discussed before, we don't do enough of. So this apparently is one tool that we could use. And under the IRS code, or the Internal Revenue Code, one of the things is to develop an advisory board to oversee and maintain the plans of action for the company. The advisory board will consist of residents of low-income communities, representatives of organizations servicing these low-income communities, and other members of these communities.
I can absolutely look into that and provide whatever information that we have to the Auditor General.
Because I do believe, the purpose from Washington for this was to have that kind of community involvement, not just some folks in a room somewhere upstairs, maybe for better targeting or whatnot. Okay, I'm trying to understand. So the company was allocated $77 million in new market tax credits. How many new market tax credits do we still have to offer? Which, of course, an advisory board would be very helpful in where those credits should go.
Absolutely. And on Zoom, we also have Lynn Seltzer from Aerial Ventures that is a consultant with the CDE right now. That's going to be helping us get everything in order as well. So, I'll pass some of these questions over to Lynn to help us answer as well, to get you the answers that you're looking for.
Yeah, I would like to see, because it's hard to follow the money in the report here and what goes where. So your income, any income that the CDE has comes from where?
Lynn, are you available?
Hello, can you hear me? Hi,
Yes.
sorry, I was automatically muted. Are you able to hear me now?
Mm-hmm.
Yes.
Okay, so let me go back to the question about the advisory board. When I say we, I mean the CDE Inc., Wayne County CDE Inc., even though I'm not a member of it. We do have an advisory board. They met recently, like about a month ago, I believe. They're supposed to meet once a year according to the rules. They have been meeting once a year pretty long. There was maybe 1 year, like 10 years ago, that they didn't meet within the time frame, but they are composed of some bankers who are potential investors who have an experience investing in NMTC projects, and also community leaders like some pastors in low-income communities, some business. I think there might be a business owner in a low-income community, and then there's leaders of other low-income community organizations that are, that have more direct contact with potential projects in the low-income communities. So the answer to that question is yes, we are currently in compliance with that requirement. The second question about how much allocation do we have left? We have no allocation left. All that allocation was used up, and the way that you get new allocation is you file a competitive application, and you have to be able to show a very strong, it's very competitive. You have to be able to show a very strong history of the right kinds of investments in low-income communities, which that has been a challenge for Wayne County in the past few years. And so in recent couple of years, they have not filed an application. So they currently do not have any available allocation. The next application time, they come out about once a year, and you get about 2 months to fill out the application. And it's expected to come out this fall if Wayne County wants to try again. However, I believe they had a consultant come in and advise them as to whether that was going to be feasible. And I think the consultant advised them that they really don't have enough history right now, although it would be useful to build up some history so that they could succeed in another future allocation. And you had a question about income, but I forgot what the question was now.
Yeah, well, I do think, and to our economic development director, building up that history. See, that's not good news that we can't even apply for new market tax credits because we don't have enough history in working in these areas. And we've discussed small businesses in other forms too. Okay. Also, the business micro. Is there? Can we get a list of the advisory board? Maybe does the AG want that? As long as are there in existence minutes of those meetings, as well as just a list of who's on the board?
I believe that there was minutes from the last meeting.
Yeah. Yep. So from our end, like I stated, we'll make sure to provide the AG with all the material that we have in regards to the board of directors as well as the advisory board.
Because as I read this and the purposes behind this, we have a lot of small businesses struggling all over this county in underserved and low income. And I don't even know if they have any idea that there is a microloan program available to them. So what does the micro loan program do? It says microloans to certain small businesses.
So this program was a program that operated in the past, and it's a program that was that was started up, especially during, it looks like during the time of COVID. It looked like it was the COVID microloan program.
Was that a vehicle for federal funds as a result of COVID to be able to disperse it out to?
So we'll take this question, do a little deep dive, and get back to you with that.
Yeah, and it entered in an agreement with a bank to create the program. So we have so the money flows through some bank that we have. But to see what those loans are and for how much, to see where we're loaning money.
So in the past, they worked with what was then Chemical Bank, which merged with Huntington Bank to create a microloan program, and they invested most of the money into that. It was supposed to be short-term loans. Most of the loans have been paid back. Some of the loans are still out there. Some of the loans have been forgiven, but that's really the only operations that have been going on since the exit of the last new market tax credits.
So if we can see what the transactions were under those loans, to see who's receiving the loans and how much and categories. And so is the CDE still taking microloan applications? In case I want to talk to some small businesses and say, hey, we've got a program here in Wayne County to maybe throw a lifeline.
I'll follow back with you on information on the microloan program in terms of the details of it. And I'll make sure that I share that with the AG as well as the commissioners.
Okay.
Yeah, just to put my 2 cents worth in, that was really intended to be a very short-term project, few months back in 2020. There was no intention to provide any new loans since then, and there haven't been any since then.
So it was just a vehicle for federal money, COVID money?
The money, I'm pretty sure the money that was used for that, the money from the CDE that was used for that was money that the CDE had accumulated from fees from its NMTC program. It had a lot of like $2 or $3 million sitting in the bank after the exit of the last NMTC project. And then so they were going to work with Chemical Bank with that. And then the county decided to put a couple $2 million in as well. So that's where, I don't know where the county part of the money came from, but that's where the CDE Inc. part of the money came from.
And to give the full story, from my understanding on the historical aspect, I wasn't here, but from my understanding was this was utilized in the aspect that Lynn just talked about, but it was also coinciding with the federal dollars that we had received.
Right.
So it was both happening at the same time to maximize our ability to help small businesses.
Yeah, was the acronym being used? I didn't quite catch it. Was that for the new market tax credits? Ma'am, were you saying?
NMTC?
Yeah, was that the?
NMTC, New Market, yeah.
Yeah,
NMTC
I don't live in
is
this world
new
every day, so those acronyms get by me quick. So we still have maybe a few loans out there, maybe forgiven or whatnot. So what's the activity now? We have no more new market tax credits to give. Apparently the micro loan program is not active. So what's the business here of this?
So part of what we are going to be doing as we come into this is creating a strategy, taking a look at what we have, taking a look at where we want to be, and creating a strategy of how we want to take this tool and utilize it moving forward.
And I would be supportive of that. You know, we don't do enough for small businesses, and we can look at these various tools to see how we can be more.
Small businesses are a priority for myself and for
Yeah.
Mr. Evans.
Well, everybody keeps saying the engine for jobs is small businesses, not multinational corporations. It's the mom and pop stores that do this. So I'm intensely interested in seeing how we can ramp up and what tools we have to push more help out to small businesses around the county.
Duly noted, Commissioner.
Thank you. Thank you, Mr. Chair.
Anything further from anyone? Can I get a motion to receive and file?
Move to receive and file, Mr. Chair, forward to the full
Motion.
commission.
Commissioner Clean, supported by Commissioner Coleman. All those in favor?
Aye.
All those opposed? The ayes have it. Next item, Madam Chair.
Clerk.
Madam Clerk, I'll be right.
Sorry.
Have my coffee. All right,
F, such other matters as may be properly submitted before the committee.
there are none.
G, public comments.
Is there anybody from the public who would like to comment? Anybody in the back of the room? Anybody from the public like to comment? Anybody from the public would like to comment? Last time. Okay, next item.
Adjournment.
Oh, wow. Got 3 motions to adjourn. You got support? All those in favor?